you can now place sports bets within your brokerage. So the lines
Hang
are,
on, hang on. Wait,
yeah.
what?
Yes, I know. I know.
March Madness is here, and so are the billions of dollars that Americans are about to wager. Sports betting, it has exploded in recent years as more states legalize it, and it's quickly moved from something you did in Vegas to something you do now on your phone during lunch. But at what cost? Well, new research shows that this surge in sports betting is more than just a cultural shift. It's showing up in consumers' financial lives, higher credit card debt, shrinking household savings, even dropping credit scores. And for a lot of people, the line between gambling and investing is starting to blur a little bit more every day. James Martielli, head of investor product for Vanguard's personal investor division, is here to help us dig into that blurring line, how this can impact your long-term financial health, and what red flags consumers should watch out for. James, welcome.
Thank you, Josh. It's great to be here.
This is a really interesting topic, so I'm excited that you're here. You know all about it, and we can dive in. But before we do that, what does the head of investment product for Vanguard's personal investor division do?
Yes, it is a mouthful, isn't
It is, yeah. I had to make sure I got it all.
Yes. Well, my team really focuses on making sure that we have the right products on our brokerage platform, make sure we have good governance around them. And we also help our clients how to use them. And then we also make sure that we can help our distribution partners to make sure they get into the right hands of our investors.
So, obviously I was framing this all around sports betting, but a lot of this applies. You can do this with actual investments in brokerages now. I mean, there are apps, there are different ways with the stock market that sort of, they look almost, you can't tell them apart.
Yeah, I mean, you can do this with with stocks, with options. You can have an investment brokerage, but if it's designed in a way to get you to trade short term, then it's designed in a way to get you to speculate.
Where is the line in the sand for you between smart investing and gambling with my money?
Yeah, so there's kind of investing, then you get to speculating, then gambling. So that, to me, that line is if you're really focused on very short-term outcomes, like I'm hoping this stock will go up tomorrow and then I'm looking to sell, or this option will pay off in a week and I'm putting a lot of money into this, or pick your sports team.
Or yeah, my Michigan State Spartans are
Your-
going all the way, and
your
that's the
Michigan-
only way I'm going to make my mortgage
Correct,
this month.
and there's an outcome. Yeah, you got it. So you're using what should be,
Which is not the case.
of
but-
course not.
I mean,
of course
they
not.
better go all the way.
But that's another story.
Yeah.
You're using what should be investments, or things that are risky for long term, and you're trying to use them for short term outcomes. And maybe even if you're borrowing, leveraging to try to get those short term outcomes, to me that's where investing turns into speculating and maybe even gambling.
People kind of treat stock trading as a sport in and
Yeah.
of itself.
Just recently, you can now, with this event contracts, you can actually place sports bets within your brokerage. So the lines
Hang
are,
on. Wait,
Yeah.
what? Say that again?
Yes. So there's some brokerages where if you wanted to pick who's going to win the NCAA tournament,
Uh-huh.
you don't have to leave your brokerage app. You can actually place that bet through what's called an event contract right within your investment app. That's a fairly new. Yes, I know. So then, I mean, to me,
What?
that line has completely disappeared then. If you're able to make those bets on sports, or who's going to say what next, it's a relatively new phenomenon. The Commodities and Futures Trading Commission regulates them, and you can access them directly through some, not all, but some brokerages. So you literally have things, you literally have your retirement fund, maybe you're saving for an education, and all within the same app. You could also place a bet on those Spartans for the NCAA tournament victory,
Or Villanova.
or Villanova.
Can you do that with Vanguard?
No.
No.
So there's a few things that we do to try to better align with long-term investment results. So one is we don't take those payments for trading or payment for order flow. You won't see some things on our brokerage platform that you might see on others, things that are specifically designed for day trading, like leveraged ETFs, 2x, 3x ETFs. You won't see the ability to place a wager on sports outcomes. You'll see a lot of stocks, bonds, mutual funds, ETFs, but we do try to curate, and that's part of my role, is to try to curate an investment lineup that does give investors a better chance for investment success.
The gamification of it all, though, just blows my mind.
And it's only accelerating. It's only accelerating.
Last year, Americans bet more than $120 billion on sports alone. That's according to the American Gaming Association. It's obviously never been easier to do this, to the detriment of our wallets in the process. How do we get here?
Yeah. Well, first I'd like to maybe just take a step back and talk a little bit about the evolution of investing and then how it became more and more blurred with gambling. So I just want to share a story about my dad. He was a payroll clerk, but he had a hobby. He liked to buy stocks. So back in the 60s, when he first started investing, he wrote to the company, got their annual report, got the he bought stocks, he got the stock certificates mailed to him.
Oh, geez.
Kept them in a gray metal box in my bedroom closet. He held them forever, reinvested the dividends, and that was the way that he invested. Now, there were two things that happened on May 1st, 1975. Can you guess what they are, Josh?
Was one of them your birthday? You were born?
Close.
Okay.
Not close.
I was
not a bad guess, but there was another birthday. It was the birthday of Vanguard. That was the founding of Vanguard,
okay.
20 miles up the Schuylkill in Valley Forge, which really helped investors with low cost investing. And it was also the birthday or the start of something else, which was the elimination of commissions, fixed commissions. So then that opened up the door to discount brokerages, which opened up the door eventually to commission-free trading.
Okay.
So fast forward to today, you mentioned this, Josh. It is in some ways great for investors. You have lots of options, low cost, very easy to invest. But those same tools that make it so easy can make it so easy to speculate and to gamble because you have it all right in your phone. And you can, turning a long-term investment into a short-term gamble is really to the detriment, I think, for many folks today. There's a quote from Charlie Munger, the late partner of Warren Buffett, and he said, "Show me the incentive and I'll show you the outcome." So you might say, well, why would brokerages and others try to encourage people to trade more? Because it's commission free. So how do they actually make their money? Well, what ends up happening after you push the button to buy or sell, most brokerages, not all, but most of them will actually sell your trade to a middleman to actually execute. So that means if you're buying something, you'll probably pay a little bit more. If you're selling something, you'll get a little bit less than if they didn't have this practice, which is, the technical term is payment for order flow. But I think what the main concept is, the more you trade, more brokerages most brokerages make more money. And that's not the right incentive if you're looking to invest long term.
Well, right. I mean, my philosophy and the philosophy that's always been taught to me is like better to be boring.
Yes.
Kind of, right?
Yes.
Because patience and time is ultimately rewarded, right? If you're doing this correctly.
For sure.
Yeah. So talking about making it easier then to do this kind of trading and the idea that a brokerage would encourage this, I guess there's got to be some kind of psychological sell there too, right? Like how are they getting people to buy in?
The broader term, like gamification, they borrowing techniques from the gambling industry. It's been called gamification. So as an example, when you see the stock price of something change, it usually blinks and, changes colors. Many brokerages will send you alerts to say, oh, look, the price has changed, and you have to actually opt out of those alerts. Sometimes if you press buy or sell, you'll have some confetti come down to celebrate the trade. And then you might also find, some more complicated things like options might be positioned in a way that makes them seem easy. And the riskier the trade, generally speaking, for brokerages that do take these payments, they tend to make much more money off of the riskier trades. So there's this disconnect between, like you said, like boring, good boring habit investing long term. If you're trying to get to trade more short term, then that's generally not going to be the way for long-term investment success.
We wouldn't even be having this conversation had it not been for what technology has sort of allowed in this whole process, right? So going back to your dad, the process that it took to trade stock then versus the process now, where you can almost do it without even fully paying attention and thinking about it, right?
For sure. So it's beyond just, it's right in the palm of your hand and your phone. It's a lot of all these other techniques that really try to get you to focus on short-term movements and get you to take some action. The flip of that would be, there's certain areas like some of the leftover money that you might have in a broker's sweep. I know you were talking to a colleague of mine a couple months ago. I know you like your high yield savings accounts.
I love my savings accounts,
Josh.
Yeah.
But if you have any leftover money in your brokerage account, a lot of times for many brokerages, they won't really pay you anything. And they hope that you don't notice that because they would earn a lot of the interest. So it's really this interesting dichotomy. Like you have your phone, you have your app, they have lots of ways to try to get you to trade. And then where you should be investing, and if you have some leftover money, they may not shine a light on that. So it's, technology can be very helpful, but it can also try to get you to do things that might not be in your best long-term interest.
So where does Vanguard fit into all of this?
Well, I'll give you an example. So you may recall about a year ago in April, the stock market went down after some of the tariff announcements. So if you went on to Vanguard to place a trade, we didn't say like, you might want to readjust your portfolio. We said, well, if your long-term goals didn't change, you may not need to change your asset allocation, just to give a little bit of a pause to say, are you sure you want to do this? So it's actually ways that we try to help investors make a little bit better decisions and not kind of feed into the frenzy.
Right, the knee-jerk reaction.
Correct.
Because again, boring is ultimately usually better.
Yes, for sure, for sure.
I was reading this one report here talking about the psychological effects of this, specifically when you're looking at maybe not so much gambling in the stock market, but just gambling in general. This idea of even if you lose and you're close to winning, but you still fall short, it can trigger some of the same dopamine responses to an actual win. So I guess going back to how some of these apps are designed, with, you said what, confetti?
For sure. Investing shouldn't be about dopamine. It should be more about serotonin, where you're a little bit more calm and relaxed. And a lot of these techniques are really trying to trigger that dopamine. So you are thinking more, you're not really thinking as much, you're becoming a little bit more emotional. So anytime you're doing a trade and if you're doing it because you're emotional, it might be good to just take a step back, take a pause, and just think about, have your goals changed? If your goals haven't changed, then maybe you don't need to change your asset allocation.
There was a study that found that every dollar spent on, and again, this is specific to sports betting, but still in the broader conversation here, every dollar spent shaved 99 cents off investments. So I interpret that to mean that people are not gambling with fun money. They're actually gambling with money that their savings.
Yeah, and that's, at least and before, when you actually kind of separated out the two, maybe you had to actually drive to Atlantic City or Las Vegas, and now it's so easy to do. And nowadays you can even have it in the same app. The harder it is to separate, the harder it is to actually have good investment habits, because if it's all mixed together, then it's harder to separate out that, maybe a little bit of money that you want for entertainment purposes.
Well, and we like the quick fixes now too, right? Or the quick
Yes,
wins.
yes.
So, much easier maybe in the short term, right, to bet, win big, or try to win big, than to, sit there and wait for a brokerage portfolio to grow.
It is, but that is, gambling is a form of entertainment. It's just when it goes too far, and when
Yes.
you're mixing the two together, and when you are kind of taking some of those bad habits and applying them to your retirement savings, your education savings, your payment for a down house, that's when it gets problematic.
Well, in states with access to online gambling now, bankruptcy rates are up like 30% too. So there you go. Sort of the financial fallout. And you're right. That's interesting too, that the habits developed with that can bleed over into your actual investment strategies.
Correct.
What do you tell someone? What do we do here?
No. You're not powerless. That's the good news.
It sure feels like I'm powerless to this thing sometimes.
Well,
so
So Josh, take a step back.
yeah.
And I got to tell you, the first question people often ask me is, "Oh, what should I invest in?" And that is not the right question. The question that I ask back to them is, "What are you trying to do with money? What is your goal?" If you have a long-term goal, 20, 30 years from now, then you could probably afford to take on a little bit more risk. If you have a short-term goal, then you probably should have your investments in something a little bit safer. That's kind of the first principle, a goal, having a goal for your money. Second is, I'll pull a Jack Bogle quote: "Don't look for the needle in the haystack, just buy the whole haystack." So that gets to balance. So you don't want to try, it's very risky to put all your eggs into one basket and trying to find, the right stock and put all your money in one stock or whatever the case might be. If you have a little bit of diversification, different stocks, different asset classes, different bonds, that can be helpful and help to smooth some of those ups and downs. The third one is, again, I'll do another Jack Bogle
Keep them
quote.
coming here.
Okay, I got a slew of them. In investing, you get what you don't pay for. So costs are really one of the few things you can control. You can't control the markets, but you can control what you pay for your investments. So just be mindful of your expense ratios. And there's also hidden costs. Like, if you're not in that high yield savings account, there's a cost to not getting that interest.
Yes.
And then the last one is discipline. Boy, is that hard. And this is like the crux of our conversation. But I got a little hack for you, Josh.
Okay.
So your 401k plan.
Yeah.
Were you automatically enrolled? Probably.
Yeah.
Probably already automatically chose an investment for you, and probably automatically chose a percentage of your salary to defer.
Correct.
So you can take those principles, whether or not you have a workplace retirement plan, and make things automatic. So if you have a long-term goal, find a fund or find an investment that kind of matches your goal and make it automatic. Set it a recurring investment so you don't even have to think about it.
Because if the money's coming out before you can realize it, it's like it was never there to begin with, right?
Correct. So I guess another quote is, "Time in the market beats trying to time the market."
Well, you came with a manila folder slew.
I was ready for this one, Josh. Let me tell you.
Kudos to you. I'm like, I should have started keeping tally of all of these great one-liners you got here. But they're all applicable to this. Real quick, too, for our viewers who don't know who Jack is. Who?
Oh, so sorry, Jack Bogle, founder of Vanguard. May 1st, 1975.
Not your birthday.
Not my birthday. I will say it's close and just leave it at that. You have to guess whether it was before or after. But he founded.
I might be willing to gamble on that.
Well, okay. We'll do an over-under. So, but no, it's been 50 years. It'll be 51 years in May. And there's been books written in terms of how much he saved investors in the firm. I mean, it's literally in the trillions. Introducing the first index fund, which this summer, I know there's going to be a birthday in Philadelphia of the 250 years.
Yeah.
It'll also be the 50th birthday of the first retail index fund as well in the summer.
Oh, I got to add that one to my calendar.
Yeah, there you go.
I was not aware of that one. Does a personal investor, the head of investment product, does he put money on a March Madness bracket?
Is this being recorded, Josh? No. Maybe for fun. Maybe for fun.
Okay.
For fun, but not my retirement money and not my education money. It's sometimes fun to fill out a bracket online and just see. And so that's the one main point I want to make is, that's entertainment if you want, and if you have it under control and that's fine. But when it starts bleeding into, I need to make up for what I lost, and now it's bleeding into your other goals, that's where it really becomes problematic.
Well, and unfortunately, and for a lot of people, and the numbers are bearing this out over the past few years, it is becoming a problem that is not under control, and it's tough to see some of the financial implications for people.
Yeah.
For someone in your position, you've got to be looking at this going, nope, we're not going there. Why are we going there?
Well, and it's interesting because we have, some folks will say, well, you have some young investors and, eventually they'll form good habits, but so let's get them early and maybe they'll trade, some.
It's a lot harder to break a bad habit.
That's very well said, Josh.
Once you're in and you're doing that, I mean, that's hard to get out of that.
Yeah.
James Martielli, head of investment product for Vanguard's personal investor division. I got it all?
You got it.
Thanks for coming in. This is really interesting conversation here, and feels particularly timely.
Yeah, for sure. Thanks for having me, Josh. Really a pleasure.